Welcome back to the Rashta Ali Show, where we talk things business, health, and self-development. So today I want to talk about something that's on everybody's mind, and that's taxes. Now, with the global trend of so many expats and business owners moving to Dubai, I wanted to talk about taxes within the region and how it's affecting business owners, and more specifically through my own journey as a UK resident who moved to Dubai last year. Some of the things that I wish I'd knew before I came, and even some things I'm currently finding out. So on today's show, we have a special guest, an expert in tax planning and international tax. He has over 20 years experience in the industry, has served hundreds of clients within the UK and the Middle East, and is an expert on the topic. He is founder of Evolution Consulting. So today I'd like to welcome to the podcast, Stephen Ireland. Hey, Stephen.
Hey, Rashda. Thank you very much for inviting me to your show.
Absolutely. Welcome.
My name's Stephen Ireland and I'm founder of Evolution Consulting. I set the business up just over 1 year ago, mainly to help entrepreneurs, SMEs and multinationals to help optimize their tax position and restructure their operations within the UAE and Saudi Arabia.
Wow. Saudi Arabia as well. Awesome.
Oh, yes.
So before we get into all the good stuff, what's a bit about your journey? You obviously in the UK. What made you come over to Dubai yourself? I'd love to hear a bit more about your journey. Is it with your family you came? And how were you just finding that before we dive into the nitty-gritty?
It was more with work, really. So I spent 14 years working for Big Four firms. So I was with KPMG for 4 years in the UK. Then an opportunity came up to come out here on a 2-year secondment. So ended up extending up to a maximum of 5 years, and then a tough decision either to move on to a local contract or go back to the UK. Right. People back in the UK saying I should go back because the tax legislation changed every year.
Yeah.
So I took that advice. I went back. Yeah. Nothing had really changed, though, to be honest. A few changes to the control foreign companies rule, but I didn't have any problems settling in and readjusting to life back in the UK.
Right.
But then basically I missed the Dubai lifestyle too much. So 3 months later, I came back out, but with PwC. So
wow.
I was with them for 4 years.
Awesome. So you're out here with your family?
Yes.
And you've been here for how long now?
Yeah, 14 years. So I came out here.
14 years?
Yeah, came out here in 2010.
So you're an old timer now.
Yes.
Awesome. Yeah. That's great to hear. So obviously on today's podcast, we're talking to our audience about business owners and expats who are moving to Dubai. They really want to understand the tax structure. Is it tax-free? You know, what's going on with the tax situation? Are they increasing it? And how does it affect like different tax structures? So I think that's the question on everybody's lips. And I think with the global trend of so many different nationalities wanting to come over to Dubai, you've got, Mexico, there's Panama, there's Spain, there's UK. So there's all of that I want to cover today. But first of all, to the really juicy stuff. Let's start with what's been happening in the UK in relation to the recent UK budget. I know there's things like inheritance tax, there was capital gains tax mentioned, and then there's the non-domicile regime. Those 3 big things, I think they've been big game changers in the tax game. So I'd love for you just to give your perspective on each one of those things and how it's affecting business owners in the UK.
Yes, thanks for that. Yeah, well, first of all, just to give you a brief overview of a few key changes. The income tax thresholds have been frozen, so pulling more people into the higher rate tax bands because wages have increased in the UK,
right?
Which leads to something called fiscal drag. So, and it's the same story with
Sorry, just 1 second. What does fiscal drag mean?
Right. So
give me an example of someone's salary, like if they're on this and how it's affected those. So that would be great for our audience.
Yeah. So basically, you've obviously got inflation there in the UK. Wages generally increase in line with inflation, but the tax bands have have remained the same. So that means that there's going to be more higher rate taxpayers effectively.
Yeah.
You've also got an increase in capital gains tax rates. So higher rate taxpayers were subject to 20% capital gains. That's now increased to 24%.
24, so it's a 4% increase. And that's when you sell your house or when you sell assets.
Yeah, well, when you sell business assets, that's the general rate.
Right.
For the separate rates for the sale of residential, that's remained the same, but the main rate of capital gains tax has increased from 20 to 24 for high rate taxpayers.
Yeah.
There's, we'll discuss more later, but changes to the non-dom regime as well.
What is that exactly, and who does that affect?
So basically, non-domiciled individuals are the ones that weren't born in the UK.
Right.
So there's a lot of high net worth non-dom high net worth individuals living in the UK.
Sure.
So previously, they were not subject to tax on their foreign income and gains.
Right.
But now they're going to scrap this regime, and now they're going to be subject to tax on them.
Wow.
So obviously, that could lead to some of those relocating from the UK.
Yeah, that's big, right?
Yeah,
that's huge.
Yeah,
because that's basically people within the UK who weren't born there, who have assets outside, so they might have property in different countries, and they'll be taxed on that.
Yeah, that's right.
Wow.
Previously, they're only taxed if they remitted, the income or gains, but now they're going to be subject to worldwide tax, just like we are UK residents that are domiciled.
100%. So that's huge. And I mean, how do you think that's going to affect those high net worth individuals within the UK?
Yeah, well, some of them, we're already seeing some movement. They are looking to relocate, to optimise their own tax position.
Yeah.
Dubai seems to be one of the top destinations. European destinations are still popular. Switzerland, Monaco, Spain, Italy is still very popular. That's what we've seen. So, but Dubai seems to be a top destination. Given the favourable regime, there's no personal tax, so no capital gains tax.
Yeah.
So it's and I've got a number of clients as well. Typically in the 50s and 60s, they built a successful business in the UK. Yeah. So what they do, and they're looking to exit. So what they do, they get the tax residence here. Yeah. Ideally spend 183 days.
You're going way too fast, Stephen's jumping straight into it. You're a Grand Canyon of information, which is amazing. So I'm just going to take it nice and slow for the audience, which is, thank you for breaking all that down. That really makes sense. I think there was one other thing, the inheritance tax.
Oh, the inheritance tax as well.
How has that changed then with the recent budget?
Yeah, so they've frozen the nil band, so that's stayed at 325,000. So just like with the income tax, you're going to get a lot of more people dragged into being subject to inheritance tax, because the typical family home will be above that.
100%.
So it's important for these families now to do some proper tax planning to mitigate that.
Most definitely. So the inheritance tax, the way it worked previously was obviously each person, they get 325,000, is it?
Nil band.
Yeah, nil band. Yeah. And then when it goes over that, it's essentially...
subject to 40%.
Right.
Yeah.
So how has that changed? Has it changed or...?
Well, that nil band, normally the nil bands, should go up in line with inflation, but because it's
remained the same,
frozen, and that's going to be frozen now until the 5th of April 2030.
Oh, so, wow. Yeah. Okay, so that's how that's affecting that situation. Yeah. I completely get that. So essentially, what you've just discussed is not looking great in terms of tax goings on within the UK, and we have already seen a massive movement of UK expats moving to Dubai. There obviously are other countries. I just want to focus on Dubai because that's generally where a lot of them are moving to. I mean, I have tons of friends and other business owners who I'm having calls with who are in the UK, and they say, at the end of this call, can we talk about moving to Dubai? And it's like, it's becoming a more and more frequent conversation that I'm having. And obviously the primary reason for anyone moving to Dubai is generally for those tax savings because they've just had enough of what's going on and obviously affecting their future, the future of their children in terms of, what they're going to get. So perfect. Thanks for sharing that. So let's move on to what it's actually all about in Dubai in terms of tax. I think the mindset around tax used to be, obviously it was 0% in Dubai, then it changed to the whole 9%. So first of all, can you speak a bit about that and how that affects business owners? And then we can come on to talk about structures and what are some of the best structures for business owners and expats coming from different countries in terms of setting up their companies here. So if we can start off with the current tax structure in Dubai, what is it?
So they've had VAT. So VAT was introduced back in 1st of January 2018. So that's 5%. So, end users basically, bear that cost. It's 5% on all, goods and services in general. So that's been there for a while, but they introduced corporate tax. So this is a new development, and this is pressure from the EU. So what happened in the UAE?
When did this come in? When did the corporate
this was last year. So effective from the 1st of June 2023. So it's a global pressure, really, for all these countries that have got no tax. There's a lot of pressure for them to introduce corporate tax. Otherwise, there's a risk that they end up going on a blacklist, the EU blacklist.
Right.
So the UAE was on that for a while, and it had to make some changes. So it introduced what's called economic substance regulations. They've now repealed those regulations because they've introduced corporate tax, which is good news. So it keeps compliance.
I did not know that. I did not know that was the driving force as to why the UAE introduced tax. I just thought that, you just think that it was 0% and now they're getting to 9% and it's going to go higher and higher. But I didn't know there was that economic driver behind that basically that drove that.
Yes, and you're seeing, neighbouring countries, so Bahrain as well. Right. That's now going to introduce tax for large multinationals, but it's probably only a matter of time before your regular companies are subject to corporate tax in Bahrain as well. So that's the trend, really.
Okay, and then obviously the surrounding areas like Abu Dhabi and Oman, it's all that 9%. It's the same. It's across the UAE, is it?
Yeah, so 9% across all the Emirates.
Across all the Emirates, Okay, perfect. So then what sort of clients are you finding that you're serving more and more of? And also a bit about what kind of tax structures are you hearing more, that's the more common tax structure, and what do you suggest is a great tax structure from someone specifically coming over from the UK into the UAE, so that they've got a well-rounded type of tax structure, that it doesn't come along a couple of years down the line, they're like, oh, I should have done this or I should have done that. Something that's quite a robust sort of structure.
Yeah, so what we've done, I mean, most of my clients are from the UK.
Right.
So we're just working on one client at the moment. It's currently headquartered in the UK, so it's got subsidiaries in the US, Australia. But now we're going to, create this head office in the UAE in one of the free zones.
Right.
This particular, group took a bit of a hammering over COVID. So if you were to value the shares now, they wouldn't be worth very much. So what we're going to do, because the shareholder's still UK resident, we're going to transfer those shares in the UK entity to the head office here in the UAE. So everything's been set up on the UAE side. Right. I mean, for this sort of structure to work, you need to have the senior management that currently in the UK to relocate to the UAE. You've got to create proper substance here.
Yeah.
So yeah, it's quite funny really, because their shareholder asked the senior management team, does anyone want to relocate? And they're all so they're all happy to move across. So yeah. And once you've got that structure in place and the substance in the free zone, you can justify, management fees to the the subsidiaries and related parties. So
yes.
And if it's structured correctly, all that income that the free zone entity head office receives will be subject to 0% tax rather than 9%, because it's one of the qualifying activities under the corporate tax law.
Okay.
So we've done that with a number of clients. That seems to be, because most of my clients are in free zones, and what we've done, we've
as opposed to
badged
mainland.
it as like a head office. I mean, there is some clients on mainland, and the reason for that is because typically they've got government contracts and government entities. Even though we've seen some change recently, they typically only want to give contracts to mainland businesses. But like I say, we've seen some change in that as well. So seen free zone entities getting contracts with sovereign wealth funds, for example, which wouldn't have been possible probably a few years ago.
Okay.
So a lot of interesting developments, really.
Yeah, no, absolutely. So that's that one type of structure. So let's talk about your average small business owner in the UK, and what sort of structures are the most suitable and most tax efficient for those in the UAE. I mean, obviously, I know tons of business owners who have that whole structure that you're referring to with the free zone setup, etc. But what about if you want to do business in different regions such as Dubai and Saudi and all those different places? I know, and I've heard of some tax structures that suit that sort of scenario.
Yeah, so I mean, the typical journey of my clients, typically a successful business in the UK and they want to expand overseas. So the UAE is a good jurisdiction as any to take that first step.
Absolutely.
And, usually the simplest way of doing it is just to set up in, one of the free zones. So, and then once the been established in the UAE for a couple of years, then generally you see them going to Saudi, which is a much bigger market.
Right. So then the question is this. If you know that you're going to be going into Saudi, should you set up with that type of tax structure, or can you just wait until it comes to that point and then do it then? What's
Ideally,
the best type of...
the long term is that, you should aim to have a local entity in Saudi. So I've got to that point now because the risk is, if you're doing business with, clients in Saudi, you create what's called a permanent establishment risk or a taxable presence. So, for example, if I was to spend 183 days in Saudi in any 12-month period, and I'm executing contracts locally with Saudi clients, then I create this taxable presence. I mean, there's two options for me. You can then register your Dubai company for corporate tax in Saudi and pay Saudi corporate tax, which is 20% on the profits of that contract. Otherwise, the easiest way to fix that risk is to set up a local entity.
Right.
But it is a long process setting up in Saudi. It can take, 5 to 6 months. So it's,
I have heard that. So in comparison to setting up in Dubai, which can take...
it can. You can set up in certain free zones. You can set up a company in a week even. So
it's super
and it'd
efficient.
Be fully operational, including bank account within a month. So it's
absolutely. And I feel like in Saudi, it's taking a while. It's getting better, but it does take a while.
That's right. But it is, because we've seen a bit of a trend as well this year. Last year we saw the odd government entity awarding contract to a UK business, for example. Yeah. But this year, from the 1st of January this year, they seem to have stopped that. They'll only issue contracts to local Saudi entities. So I've now got a number of UK clients that are in the process of setting up a Saudi entity, because obviously they need to get the contract. Yeah.
Absolutely. So just another quick question. Say if you wanted to do business in Kuwait or anything like that, is it the same thing? Do you have to set up something there as well?
Yes. So yeah, Saudi, very similar to Saudi. It's got this quite aggressive concept of permanent establishment.
Right.
You can basically spend just a few days in Kuwait, and that can create a taxable presence there. So
right.
Ideally, if you're doing business with with a lot of customers in Kuwait, you should have a local entity there.
Okay.
Just to mitigate any tax risks.
So essentially what you're saying then, in the UAE, you have to have the tax entity within all of those countries.
Yes.
And the one that you do in Dubai is not going to be applicable to those. It has to be for each specific country.
Yeah, well, that's if you're doing a high volume of business.
Yeah.
Like at the moment, we're doing a lot of work in Saudi, so
right.
we have to set up a local entity, basically.
I understand that.
To manage that tax risk.
Okay,
yeah.
That completely makes sense.
Yeah.
So just moving on then, and you keep
Yeah.
mentioning this 183 day.
Oh, yes.
So
Yeah.
do enlighten the audience on what it's all about, how it affects UK residents, and how they can actually take advantage of this new 180. Is it 180 or 83 days?
Yeah, just let me give you a bit of background on that.
Sure.
So there's two separate matters we've got to look at, residence visa and tax residence. So residence visas these days are, generally for 2 years.
Correct, yeah.
To keep that residence visa valid, you have to visit the UAE once every 180 days.
Right.
If you're outside the UAE for 180 days, that visa will just lapse, and then you have to, go through the process of getting a new visa.
Right.
Tax residence, you just got to keep that, completely separate. Because I'm still having conversations with people that
So seriously, one thing my head isn't getting around. So you can have a residence visa here, and then you can have a tax residence. Is that what you're saying? So
yeah, but you've got to separate the two, because I've spoke to people and they think just because they've got a residence visa it makes them a tax resident of the UAE, but that's not the case. The only way you can become a tax resident in the UAE is to spend 90 days here in a 12-month period.
Right. Okay.
Yeah. So
okay,
you've got to separate the two. So the residence visas, you're right to live and work here for 2 years.
Yes, correct. Yeah.
For tax residents, you need to spend a minimum of 90 days here to become a tax resident here.
Okay.
Yeah.
All right. So then how are people from the UK utilising this in terms of spending that amount of time here and spreading their time throughout the year? Are they spending it in the UK for 3 months, 6 months here, and then 3 months somewhere else? Because I know there's this sort of trend going on as well.
Exactly. So those businesses that that can work remotely are the ones that are really benefiting from this. So
the work from anywhere lifestyle.
Yeah. So generally, and this is what I do myself as well. They'll spend 90 days in the UAE to get the tax residence in the UAE.
Right.
A lot of my clients, you've got to carefully manage your days in the UK. For most of my clients, as long as they spend less than 90 days in the UK and less than 30 working days, then, they should be UAE residents.
Right.
And you've got the additional protection under the UK-UAE double tax treaty. You don't really want to rely on that because it's quite subjective.
What is that, sorry, that UK-UAE tax treaty?
Yeah,
What is that?
so basically it means that your income can only be taxed in one jurisdiction. So if you're a UAE tax resident, then you shouldn't be subject to UK tax on that same income.
Right.
There is some exceptions to that, for example, rental income, that's UK sourced income.
Yeah.
I mean, I've been, like I say, I've been living out here since 2010. I've rented out my home, and I still have to file a tax return every year. Unfortunately, I just pay a little bit of tax. By the time you've deducted agents' fees, you get credit for the mortgage interest. So I still have to file a tax return for that type of income. But everything else, is not subject to tax because I'm a UAE tax resident.
Right. Okay. So what types of things are you not taxed on then, being that UAE resident? So obviously you're the rental of the property, but are there any that you're not?
There is some anti-avoidance rules in the UK which you've got to carefully manage. So I've got a number of clients that have still kept, even though they've relocated here, they've still kept their UK business.
Right.
That serves their UK clients, and the Dubai company generally serves the international clients.
Yeah.
So you could have a scenario where a UAE resident shareholder, the shareholder of the UK business, still receiving dividend income.
Right.
You've got to be careful with that because the UK's got these what's called temporary non-residency rules.
Right.
So if you're a UAE resident, receive this dividend income, and you were to become a UK resident again in the next 5 years, then that dividend income will be taxed when
goodness.
you return to the UK. So there is some pitfalls to be aware of.
Yeah, God, it sounds like it. It sounds like it's a very, very complicated field to navigate.
Yes.
And obviously someone like yourself having that UK and the international exposure is definitely a key person to have in the business. So if we just bring it back to say I'm a company within the UAE.
Yes.
How does it work? Like, do I have to, when do you have to file your corp tax? What is the actual threshold? All that sort of good stuff.
Yeah.
What is the main sort of things people should be thinking about?
Yeah, so most businesses, 2024 will be the first reporting period for most businesses.
Right.
And most businesses have a calendar year end. So the first reporting period will be the year ending 31st of December 2024.
Right.
And you can have a different financial year end. Usually, if a UK client's got a March year end, normally the UAE business will align with that and opt for a March year end. So,
okay, that's good.
But most of the time it's a calendar year end. So every business, including free zone entities, have to register for corporate tax.
Yeah.
Again, that's something where
after
businesses.
How long do you need to do that? After how long?
Well, it depends on when you renew the license. Basically, if you renewed your license in the first half of the year, then you should register for corporate tax earlier on in that year. There's a table of dates, when you need to renew the deadlines for renewing the license. But if you're a new company and you set up this year, you've got 3 months. From the date of incorporation to register for corporate tax.
Yeah, and if you don't register, obviously there's those penalties.
It's a late filing, registration penalty of 10,000 dirhams.
10,000 dirham, which is approximately 2,000-ish.
Yeah.
I just divide it by 4. I'm not very particular, but about £2,000 for a late filing, which is quite big, right? So you don't obviously want to miss that.
Yeah.
Yeah, for sure. Okay, so then what practical steps would you give for a business owner coming over from the UK in order for them to be able to save on their taxes within the UAE? Are there any practical steps that you could give?
Yeah, I mean, obviously, the UAE is a much lower corporate tax rate than the UAE. So, I mean, just to give you an example, I've helped businesses. So, like I say, often they retain the businesses in the UK.
Yeah.
They'll have the UAE business here, which will typically invoice overseas clients. So you're saving a lot. Because if you didn't have that Dubai entity, then all your income would be subject to UK corporation tax.
Yes.
So especially where businesses have got clients here in the region, if you invoice that from your Dubai entity, then you save a lot on the corporate tax. But where you make most of the savings on the personal tax side. You typically, it's always preferable to pay yourself a salary rather than dividends. So for the salary, that'll reduce your taxable profits. So, which will be subject to the 9%. And obviously, because there's no personal tax, you're not taxed on that salary. Nice. So,
absolutely. Yeah. So, I mean, you've seen these changes now from obviously pressure from the EU, etc. What do you foresee? I know obviously the trend for everyone, expats from all over the world coming to Dubai is due to increase. I think from the UK alone, they're due to see within the next couple of years, I don't know, I think something like I read 400% increase of high net worth individuals coming over to Dubai. So then the question is, do you have any sort of foresight of what you feel like the tax landscape could be within the region for the next 5 to 10 years? Have you got any sort of your own perspective on that?
Yeah, I mean, I think it'll be a while. I think they will eventually introduce personal tax, but not for the next 5 years.
Right.
They've made some changes to the VAT legislation, so they've introduced the invoicing. So yeah, there's a lot. It's changing rapidly, the environment here, and tax rates. 9% is currently one of the lowest rates in the world. So
yeah.
There's always scope for them to increase that and introduce other taxes like withholding tax. So withholding tax is when you make a payment outside the country for services, for example. So Saudi's got these withholding taxes.
Okay.
So the rate depends on the type of service or the type of income.
Okay.
So the UAE could well introduce these withholding taxes as well.
Yeah, exactly. So there's always scope for different things to come in at different times. But right now, this is very new, the corp tax. It's only been a year and it's only being implemented this year. So this is what's happening right now. So what is the threshold for the numbers in terms of tax liabilities? What are the numbers?
Yeah, so the first 375,000 dirham of profit will be subject to 0%.
Right.
Anything above that will be subject to 9%.
Okay, so that's a fairly...
And there's other reliefs available, applicable to the smaller businesses.
Yeah, I was just going to come to that, things like exemptions and stuff.
Yeah, there's what's called small business relief. So if your revenue's less than 3 million dirhams...
Right, which is approximately 750,000.
Yeah, about just over 800,000.
You're probably better at it than me.
I'm sorry, I'm talking in dollars. I think it's about $817,000. So, it's quite a good amount.
Yeah.
So in this small business relief, that's guaranteed until 31st of December 2026. So as long as your revenue's less than that, then no corporate tax for those businesses. I mean, what they'll do after 31st of December 2006, no one knows whether they'll extend it or scrap this small business relief.
Yeah.
Yeah.
I mean, there's a ton to it. So thank you. That's super insightful. So I have some other questions here that I just want to go through that are probably just slightly off, but still in relation to it. So UK pension, is it taxable in Dubai?
It depends. If it's a government pension, then that's still going to be subject to UK tax. But we have got clients that receive their pension.
Right.
They make a claim. I refer to the double tax treaty.
Right.
There's a provision in that where you can basically get an exemption from UK tax.
Oh.
So we've got a number of clients now that have retired, bought property, got a golden visa, now basically retired here and receiving the pension gross. But you have to make a claim under the tax treaty, which involves obtaining a tax residence certificate, which is issued by the UAE tax authority.
Wow. It sounds like you've got such a plethora of knowledge regarding this, because not every tax planner would have this information that you could do this and that in relation to this. So it sounds like you provide a very unique service and all these different offerings to basically help save those taxes in all different fields, which is amazing. So then there is no capital gains tax in Dubai, correct?
No. Yes, correct.
Perfect. How many days can you stay in the UK without triggering tax? It was 90, was it?
Yeah, I've oversimplified it there because it all depends on the number of ties. So, for example, one of my clients, as long as he spends less than 90 days in the UK and less than 30 working days, then he shouldn't be UK resident.
Yeah.
But he does have ties to the UK. He does have an apartment in London, for example. But because he rents out on a long-term basis and doesn't have access to it, then that doesn't count as a tie. Yeah. But, if he kept it empty, for example, that 90 days that I mentioned, that would reduce to 45 days. So,
oh, my goodness.
So, and if another ties, you've got family living in the UK, for example, that's a family tie. So all these ties can potentially reduce the number of days you can stay in the UK. So it's important to So I've oversimplified it a bit there with the 90 days.
It's not just 90 days, yeah. So it is
could be
great.
45, yeah.
Wow, did not know that.
Yeah.
So there's so much stuff coming to light here. So it's great to always sit down with a tax planner, then you assess what you've got in the UK, and then you can advise accordingly on that, which is great. So in relation to UK inheritance tax, by coming to Dubai and by being a resident here, is there any way that can be prevented slightly in terms of inheritance tax in the UK, or is that always going to be applicable?
Yeah, I mean, you're subject to UK inheritance tax. It all depends on your domicile, so it's very difficult to lose your domicile. Even though I'm a tax resident here, I've still got UK domicile, so I'm subject to IHT on my worldwide assets.
Right.
So that's something else where clients need educating. They don't realise that they built significant assets here, and they don't realise you're subject to IHT on your worldwide assets. So if you're UK domiciled, then you've got potentially 40% IHT liability on your UAE assets as well as your UK assets. So interesting. Yeah.
So that's a lot. I think there's just so much to it. I'm just like, whoa. I'm just like, I did not know all this stuff.
Yeah.
So that's amazing. Thank you for sharing that.
Yeah.
So then, all right, say I'm someone who's coming over to the UK. I've set up, I've got my residency visa, all that.
Yes.
I've come here, I've been here a month or two. What would you do? What would you say are the first three things in relation to tax planning or just figuring out all the tax in relation to your company? What should a business owner do?
Yeah, I mean, the first thing is, if they're building significant assets here, they want to, register a will because, if anything was to happen.
Oh, lovely. I'd love it. Yeah, sorry. I haven't actually had this conversation with anyone in the UAE. So this is really interesting.
Yes.
So how does it work here in terms of, I just had the thought, in terms of property, selling it, passing it on. How does that work?
Yeah, so if you don't have a will or what's called a foundation and you've got assets outside the financial free zone, so when I say the financial free zones, DIFC and ADGM,
right.
I mean, these jurisdictions are both quite unique because you're subject to UK common law. So if you've got businesses in those financial free zones, then you've got that, protection from a legal perspective.
Yeah.
If you've got businesses outside those financial free zones, then you're subject to, if anything was to happen to you, you're subject to Sharia law. So basically what happens, assets get frozen and then, it becomes a bit of a nightmare for
so don't set up anything in those free zones.
Well, you can, but it's important then to register a will. So you can register a will in DIFC, for example.
Right.
What's becoming more popular than that now, though, is a foundation. We're getting more and more people invested into real estate.
Yeah, of course. That's massive here in terms of how many actual real estate brokers there are, in terms of the property market, just what's going on in terms of the prices. So a lot of people are getting involved in the real estate in Dubai, in the UAE region, especially in Dubai.
Oh, yes.
So a foundation, what does that look like
exactly? So that's like a trust. So that's become very popular for holding real estate, for example.
Can I just ask, is that a lot more expensive to set up than
No,
doing
it's actually more cost effective than just setting up in a regular free zone. So that's, you can't do business activities with a foundation. It's purely for holding your assets. So a number of our clients have a foundation and then they'll have the business. Yeah. That the foundation will be holding the shares in the business. So it's a very good tax planning tool because up until corporate tax was introduced, they had a number of clients that set up in the Abu Dhabi free zone that I mentioned, Abu Dhabi Global Market or ADGM, set up an SPV there to hold real estate in the UAE because they wanted that legal protection. So, but now it's not very popular since they introduced corporate tax. You have to register that SPV for corporate tax, and then you'll be subject to 9% tax on any rental income or capital gains, which can be quite significant given the increases in property values over the last few years. So So what a few of my clients have even done, they've transferred that property to a foundation.
Right.
So you still have to, a foundation's like a trust. I mean, it's used for succession planning. So
because in the UK to create a foundation or a trust, it's very expensive, isn't it?
Yes.
Yes, it's different in the
So
UAE.
it's a lot more cost effective here as well. And then you typically have your children as the beneficiaries.
Yes.
So if anything was to happen to you, you know, the assets will pass to your children.
Can pass on that.
Yeah, without any issues. But the foundations, you know, really tax efficient for holding real estate as well.
Yeah.
You still have to register the foundation for corporate tax, but you can make an election to treat it as transparent. So from a legal perspective, the foundation owns the real estate, but from a tax perspective, it's like the individual owns the real estate, because there's no tax, assuming the individual's UAE resident, then there's no capital gains tax on the sale.
Stephen, as you say. Wow.
Again,
so that's
technical.
It is very technical, and I'm just thinking, wow. I mean, in the UK, I was there for 42 years. It took me quite a while to get my head around that, and obviously in the UAE, a whole new place. It's very, very important that we understand all of these things. So from the point of setting up your taxes to the end game, right? Your wills, and obviously passing it on, etc. So that's very, very insightful. So that's kind of, what about the third thing? What's one other final thing you'd recommend a business owner to do in terms of tax planning in the UAE? Yeah,
I mean, just using the free zone status. I mean, we've got a number of clients that actually have a mainland business, which, you know, invoices the mainland clients, because in some cases they've got mainland clients and overseas clients, so that'll be typically used to invoice those. And then they'll have the head office in a free zone typically, so you'll have your senior management on free zone visas. You'll have business support functions. So I've got clients that have got all these various business support functions, like a legal department, finance, marketing, HR. So what we do they're all sat in an office on mainland at the moment, but when their mainland visas expire, we'll move them onto a free zone visa. So you're actually creating substance in that free zone, and once you've got that substance, you can then justify management fees to your mainland entity and to any overseas entities, and all that income then is subject to 0% in the free zone rather than the 9%. So there's a lot you can do. I mean,
it sounds like it.
Just talking about Saudi, because like I say, a lot of clients in Saudi now. So typically the free zone, whether that's DIFC, ADGM or another free zone, that is typically the parent company for the Saudi subsidiary.
Right.
I mean, we've done this for a number of clients. So what's happened, for whatever reason, there's been delays in opening the bank account in Saudi. So you've had this large so basically the UAE company's been paying, expenses on behalf of the Saudi. So you've got this big intercompany balance being built up.
Can I just ask, what's the big delay with the whole setting up of bank accounts in Saudi?
It's actually a lot easier to set up a bank account in Saudi than it is in the UAE. It's just that the whole, incorporation process takes long. That's where most of the delay is. So you typically get your commercial registration after a month, but then you've got all these government registrations with various authorities, which takes the time really. So like I say, it's usually 5 or 6 months before an entity is fully operational, including bank account in Saudi. So typically what you see in practice, the UAE entity paying expenses on behalf of the Saudi. But what we've done with these clients, because they have this big intercompany balance, we formalised that into an interest-bearing loan. So basically, and that's quite good from a tax planning perspective, because your Saudi companies are subject to 20% corporate tax. I mean, it's a bit complicated in Saudi. How a Saudi company's tax depends on the ultimate ownership, but most of my clients, they're all foreign, held by non-GCC nationals, which means the underlying Saudi business is subject to 20%. But to reduce the taxable profits in Saudi, like I said, we've formalised this into the related party loan, into a proper formal loan, interest-bearing loan. And the Saudi entity will take a deduction for the interest paid, so reduce your taxable profits in Saudi. there's normally a 5% withholding tax on the interest payment outside of Saudi, but under the UAE KSA double tax treaty, that's reduced to
KSA is
zero.
short for Saudi, by the way, guys.
Oh yeah, sorry. Yeah.
I never knew that when I first got here.
Yeah.
Okay.
Yeah, and providing loans to related parties, that's also a qualifying activity within a free zone. So that interest income received from the Saudis is subject to 0%. So
we love a 0%, right?
Yeah, so it's another good tax
strategy. Absolutely.
Tax strategy there. Yeah. So.
I feel like you've got some amazing strategies. Some of them have gone way above my head, but at the end of the day, obviously, we're coming from the UK and we're just trying to figure it all out here as business owners. So we leave it to the experts. Yes. So I feel like that you've got such an abundance of information, and anyone thinking of coming over from the UK it's worthwhile investing in contacting somebody like yourself. So before we end the podcast, we're almost coming to the end. I just want to ask you a quick fire few questions.
Sure.
So when you're ready, I'll ask them. UK breakfast or Dubai brunch?
Oh, well, yeah, it's a difficult one.
Do you miss the older UK breakfast?
I'd have to say, a Dubai brunch is like a food marathon, isn't it? So I'm trying to watch my weight, so I'd have to say UK traditional breakfast, I think. For that.
Amazing, you can't go wrong with the UK traditional breakfast. Yeah. The Burj Khalifa or the Burj Al Arab?
Oh, the Burj Khalifa. Yeah.
Have you been to the top?
Yeah, many times. Amazing. Every time family come over or friends, we
You're like to the top?
Do, yes.
How was the view from up there? I haven't been yet.
Have you never been?
Not yet.
No.
I've been here for 16 months and I haven't been yet.
Oh, yes.
Yeah?
Yeah, definitely. And there's a restaurant called Atmosphere, so I'd recommend that. So we did... My parents were over a few weeks ago, so we did afternoon tea there.
Oh, beautiful.
But I would recommend the breakfast there, I would say. And,
Beautiful. That sounds great. I know you have to book so much in advance, right? Because it gets quite
usually,
busy there.
As long as you book a week in advance, then you should be fine, yeah.
Perfect. Yeah. Okay, and what's your favourite thing to do in Dubai?
Oh, I'll have to be playing paddle tennis outdoors, especially.
Paddle tennis?
Yeah, it's a new phenomenon here. So
what's that involve? So you're...
Well, it's like tennis. Well, it's like a combination of tennis and squash. So
amazing!
You've got this area, Al-Qos. It used to be like industrial area.
That's right.
A lot of warehouses, but they seem to have converted half of that to paddle tennis course. So it's good fun and it's
amazing.
It's great for networking as well and building new connections, and you have a good laugh as well.
Awesome.
Not quite as serious as tennis, so really enjoying that.
Great.
Especially outdoors when the weather's amazing.
Absolutely. In these coming months, right, where it's lovely. It's like the purple patch, they say.
Yeah.
So, I mean, Steve, it's been amazing having you on and obviously advising the audience of tax planning, what it all involves in the UAE, including Dubai, and the actual trend that's taking place with business owners trying to set up in Saudi also. So thank you so much for that. If our audience or viewers want to find you, where can they find you in terms of website and Instagram?
Yes, so the website is www.evolutiongcc.com. I'm quite active on LinkedIn as well. So
what's your handle on LinkedIn?
Well, if you just type in Stephen Ireland in the search bar, should pop up. But awesome. I can share the actual link with you.
That would be great. I'll share it in the description. That'd be amazing. So, guys, there you have it. Taxes in the UAE, specifically Dubai, explained. I hope it's given you some insight. I know I would have loved something like this before coming over to Dubai to help me to better plan my taxes. So for today, that's it. I hope you enjoy the show and I'll see you next time.